Let's talk crypto with design.
Real-world assets refer to tangible assets that can be tokenized and represented on the blockchain. In traditional finance, risk-weighted assets play a crucial role in lending and income generation activities. However, in the DeFi space, the potential of real-world assets is yet to be fully explored. It is reported that the estimated market size of real-world assets will reach $350 billion by 2025. To tokenize assets, it is necessary to convert off-chain information into codes and metadata for digital tokens. Developers typically use smart contracts to create tokens. In the DeFi sector, although the RWA market is relatively small, it is still vibrant. It can be divided into DeFi protocols based on equity, physical finance, and fixed income. Underlying assets are the most crucial elements. In the current stage of the RWA race, the underlying assets mainly fall in the following categories: bond assets, primarily short-term US Treasury bonds, or bond ETFs. Typical representatives include stablecoins like USDT and USDC. Some lending projects such as Aave and Maple Finance have also joined the camp. US Treasury bonds or bond ETFs currently represent the largest portion of RWAs. Gold with Pax Gold is a typical representative. However, its development is slow and there is weak market demand. Typical representatives of real estate RWA are Realty, Labs Groups, and many more. It is similar to packaging real estate into REITs and then going onto the chain. For loan-based assets, typical examples include USDT, Polytrade, and many more. These types of assets are diverse and can include personal mortgage loans, corporate loans, structured financing tools, car mortgages, and many more. Equity-based assets with typical projects including backed finance and Sologenic. Trading of these types of assets is heavily restricted due to legal issues. Others, including farms, artwork, and many more, are asset types with larger scales but lower standardization. Of course, considering the liquidity, standardization, scalability, and yield of underlying assets, we are optimistic about bond assets. They have good quality, high standardization, and significant growth potential. Finally, as the most familiar asset for retail investors, RWA may become the primary target for non-Web3 native investors in on-chain investment. For them, the borderless nature and permissionless access and operation of on-chain assets open the door to investing and using a broader range of global assets. On the other hand, for entrepreneurs in this field, this also provides unprecedented user breadth, scale, and extremely low customer acquisition costs.